Hi, this is Paul from Patriot Business Finance Consultants, and the video we're going to do today is we're going to talk about industrial hemp fiber processing in the United States of America. How can you build, own, operate, and fully finance a factory in the industrial hemp fiber processing industry? I'm going to go over all that with you. Okay, here's a little bit of information. And for the people who know, this video is targeted towards people in the industry who want to build, own, and operate processing facilities. Who would that be? Well, it could be farmers. You've got farmers growing industrial hemp fiber. They need somebody to sell it to. Guess what? A group of farmers could get together and build a factory, and then they could grow it and sell it to their own factory. You have manufacturers who are currently in the United States. They're buying from some of these 20 processors, but what they were doing before these processors came into existence is they were importing the raw materials from Europe, manufacturing whatever they manufacture, and that is insulation to build houses with, hempcrete, OSB boarding made out of hemp, 2x4s. I mean, it's called hemp wood. Then you got another company called Hempwood, and they make flooring for houses out of hemp. So those are potential people who would want to own factories, own their own processing, own their supply chain, or be able to sell to their own factory. Now, well, let me just read this to you. Here we go. Hemptoday.net, February 9th, 2023. U.S. hemp fields are expected to reach 50,000 acres by 2028 as production expands at a rate of 34% per year. And processing infrastructure, which is what we're talking about, processing infrastructure, continues to expand, according to projections from Denver-based analyst Pan Exchange. That means the projected value of the corrugator capacity in the United States will gradually rise to reach about 2.3 billion by 2027. Pan Exchange projected. Broad analysis. The forecast comes in a newly released report, U.S. Industrial Hemp Fiber Processor Capacity and Margins, which provides a detailed overview of the current state of the United States hemp fiber sector, as well as projections for the next 5 years. The report analyzes U.S. supply, demand, the national and regional landscape, demand drivers, current raw materials, pricing, processor capacity, and future marketing expectations. Pan Exchange reported that 20 U.S. hemp fiber processing plants are now operating and capable of the initial processing or decorticating hemp biomass, and 6 exist in Canada. An additional 8 to 12 are expected to start production in the U.S. by 2028. Income from hemp grown for fiber reached $41.4 million in 2021, according to the U.S. Department of Agriculture. And estimates from the National Industrial Hemp Council of America are that fields dedicated to processing of the hemp stalk will eventually reach roughly 30% of all hemp harvested by 2030. The report recorded the total value of hemp harvested in the USA last year at $824 million. The United States market is expected to increase to $2.3 billion by 2027. Okay, profitable business, profitable industry. There are buyers for the product that these factories produce. We've identified those buyers. We're financing 3 of these projects in the United States. So we've already done the due diligence. We know what's going on with this industry. We know it's profitable. People aren't going to invest into it if it's not. And we're closing our first deal in May with an SEC compliant capital raise. Boom. All right. So let me tell you some more information. That's kind of a general overview of the market. Let me tell you about something exciting that has happened to us last week. Of the 3 projects that we have, two of our clients are using equipment from another manufacturer. One of our clients is working with a different manufacturer. So we've been familiar with this manufacturer for a little bit over a year now. We know who they are. We've done our due diligence on them, and we know that they're quality. Let me prove it to you. They've been in business since 1866, so that's a little while time in business, right? They started out as textiles and fiber processing. Since 1866, they've expanded greatly. They're worldwide. They go to all the trade shows in Europe. They go to all the trade shows in the United States. They're at NOCO right now in Colorado, the International Hemp Expo. And these guys are big players. They're quality. They have 4.5 ton per hour lines. Put two of them together, you got 9 tons per hour that you can process. Put three, you can do 13.5 tons per hour. That's the sweet spot. You do not want to start at a 18 ton per hour processing line. There's reasons for that. You don't want to start there. You don't want to start small at 4 tons per hour. Right there in the middle is the sweet spot. Because after you got a couple years in business, you expand to 18 tons per hour with a business expansion, and the business expansion is less expensive to do than a capital raise initially for that dollar amount. There's reasons. I'll go into that with you if we have a conversation. You're going to hear me describe the manufacturer that we represent. You're going to hear me in this video describe my capital raise partners that I work with. Those names will be disclosed to you, all information, bios on everybody, full equipment detail after we sign a non-compete, non-disclosure agreement. So you'll hear me talking about them, but I'm not going to mention names until we have a conversation and we sign an NDA. All right. Let me tell you about my business and our role in this and how we got into this. Patriot Business Finance Consultants, equipment financing experts. That's what we do. Real estate financing, we get it done. Factoring, purchase order financing. Those are our main products. August 2020, I had a deal that dropped on my desk. And I instantly, for a 12 ton per hour industrial fiber processing facility, I recognized immediately that's not a deal that my lenders want to touch because they don't do that. That's a capital raise is what that is. Securities and Exchange Commission compliant capital raise. Always remember that. That's very important. Okay, there's law, state law, federal law, securities laws. There's only so many ways you can raise money, and you got to do it legally. You can't just take money from your uncle, from your brother, from your sister Susie. You can't do that. I mean, you can. You might get away with it as long as nobody complains, but you shouldn't do it that way. You should do it the right way. And it costs money. I'm going to go into that in this video. I'm going to detail the cost, what it costs, why it costs. I'm going to justify that to you. And don't be surprised that it costs money to raise money. When you're on the Clubhouse app, when you're on LinkedIn, Facebook, whatever social media you're looking at, people are talking about how to get investor money. Well, what they don't talk about is the upfront costs, because it costs. They don't talk about the Securities and Exchange Commission. They should, but they don't. They just tell you how to go dress nice, get a nice pitch deck. And by the way, pitch decks don't raise money. So there's many details in this. This is a very detailed subject. I'm going to do the best as I can in this hour-long video to go into most of it. But if you got interest, you know where to call me. Paul@patriotbfc.com. Email me, set an appointment. Let's go into deep detail. All right. We've already covered that we're the representative for this manufacturer. So we've got that equipment locked down. When we talk, I'm just going to present you with who they are, give you all the information. At that point, it's up to you to decide if that's the right company to buy the equipment from. If you're going to build a factory like this, we can make the introductions, give you all the specs, give you all the details, and you can decide if they are the equipment manufacturer that you want to work with. The second part of it, raising money to build a factory. Like I said, it costs money to engage in a capital raise. I don't want you to be surprised by it. And I'm going to give you all the details and tell you exactly how much and why. All right. I mean, you got to pay professionals. You cannot. And by the way, if somebody comes to you and they tell you that they'll raise money for you without any upfront cost to create the PPM, private placement memorandum, to create a preliminary and final prospectus, nobody does that for free except amateurs. And you don't want to work with amateurs. Okay, so let's dive into that. How to raise capital. Securities and Exchange Commission compliance. The founders of a company are legally allowed to raise money by themselves. You don't need to hire a capital raising group. You don't need to be licensed. And that is when I had that deal drop on my desk and I recognized that my lenders don't want to do this. They don't do this. You have to have 3 licenses to raise money, and you have to be experienced. You got to know how to do it. So that's who you want to work with when you hire a capital raising group. And that capital raising group, their job is to keep you compliant with all of the laws. So as the founder of the company, you can legally go out and raise money by yourself. But if you don't know how to do it, you shouldn't do it. If you don't know how to do heart surgery, don't go into surgery, right? You got to be an expert in your field. That's why you hire experts to do things like this for you. What's required to raise money? First thing that you need is a preliminary prospectus. That's a 40 to 50 page document. Okay. In it's a business plan designed to raise money. This is not the type of business plan that you can write at your kitchen table if you're buying a pizza shop and you got to present a business plan to a local bank. This is way different than that. And what's included in a preliminary prospectus? So a preliminary prospectus is all the good, all the beautiful, how blue the sky is, how green the grass is, and all the money you're going to make, how great this business is. All the good stuff is in there, of course. Per the law, the Securities and Exchange Commission, you also have to detail all of the risks. How can it blow up? How can the investors lose their money? Every risk has to be detailed. You can't miss a risk, right? By accident. You can't forget to put a risk in there. That's why you hire a professional capital raising group, because they don't miss it. So all the risk has to be detailed and how the investors can lose their money. In addition to that, we don't just leave the risk sitting there looking ugly. Okay. The prospectus is a truth-telling document. If that risk cannot be mitigated, cannot be reduced, cannot be made to be at an acceptable level of risk, then that's what it says. That's the truth is the truth. What we've discovered with financing 3 of these projects is that that risk can be reduced to where it's acceptable for investors and money people to put money into it. So in the preliminary prospectus, which turns into a final prospectus because it's constantly updated along the way until it becomes the final prospectus, all the beautiful, all the good stuff, all the money, all the risk, how investors can lose their money. Move over to the third thing that's in there. Oh, and by the way, those first 2 sections of it are all supported by evidence, research, and cited, evidence that is cited. Okay. Moving to the third part of a preliminary / final prospectus, you have 5-year financial projections. Okay. A CPA creates those, but there's 2 types of CPAs. There's a CPA, and then there's a CPA who holds accreditation from the American Institute of Certified Public Accountants. That's a 10th degree black belt for a CPA. A CPA is a black belt because they're smart and they know what's going on. A CPA with that accreditation is right here. Professional investors, people who are putting big money into projects, when they read a prospectus and they look at the 5-year financial projections, if they're not created by somebody who holds that accreditation, then really, what are they? They're not as believable. They're not as reputable. The American Institute of Certified Public Accountants, if you hold that accreditation, those standards are recognized worldwide. You can raise money worldwide by using those 5, that accreditation and those 5-year financial projections. It's the same standard formula. You put the math in, either it comes out and saying, yes, this is profitable, here's the money we're going to make, or it says we're not making any money. It's a truth teller. So, and in what we've discovered, 5-year financial projections in this industry these are very profitable businesses, big time. You heard the numbers right here. What did I say? Projected to be $2.3 billion in 2027 in the United States. So that's a prospectus. What does it cost? It costs $48,000. Now you can Google it. what does it cost to create a business plan or preliminary prospectus? You might see $15,000. You might, because I did it, you might see 25, you're going to see 55. And it all depends on the level of complexity of the project. The more complex it is, the more it costs. So, yeah, on contract, it takes 3 months to complete a preliminary final prospectus to build a factory with. When we make a contract with you, if you engage in a capital raise with us and our capital raising business partners in Cleveland, then it takes 3 months to create this. There's a lot that goes into it. Why does it cost $48,000? I asked that question when I connected with my guys in Cleveland because I knew I had to explain it to people. So of course I asked them the question because I need to explain it. And Bill and staff are the owners. Staff told me, he said, Paul, the people that we employ, they have a team of 8. The people that we employ to do this work with us, we pay them as much as attorneys make per hour because they're worth it. They're high level. They are attorneys. Their staff is comprised of attorneys, CPAs, and accountants. And they pay them all as much as attorneys make per hour. Let me go into deeper detail on that. One of the team members on their on Bill and staff's group raised money for a NASCAR team. He raised money for an NBA franchise. He built stadiums across the United States using government money. So this guy's not cheap. You put attorneys to work for you for 3 months full time, you're going to get a bill like that. That is why it's $48,000 to create a preliminary prospectus. That's the truth of it. Okay, moving on. Next thing, private placement memorandum, PPM. Okay, required by the Securities Exchange Commission to raise money. By the way, let me go backwards. The prospectus, that is what investors say yes or no to. When they read it, that's what they say yes or no to. That's the story of what you're trying to do. All the good, all the bad, all the projections. Okay, back to the PPM. Investor, when you take in investor money, it has to be recorded. Okay, the PPM is a living document until you pay the investors off and buy them out. Okay, it's a technical, sophisticated document. When you are taking investor money in, you have a capital raising group. This is what a capital raising group does for you. If you're the founder of the company trying to do it, this is what you got to do. And if you don't know how to do it, you should hire a capital raising group. But every investor has to be vetted and investigated. They have to be what is defined as an accredited or sophisticated investor. Okay, with the law, SEC law, you can raise money from unaccredited investors, accredited investors, and sophisticated investors. For these types of projects, the best people to raise money from are accredited investors. We don't play around with unaccredited investors. Okay. When you take money from an accredited investor, you have to verify that they are in fact who they say they are, and they're capable of doing that. They meet that definition. That's what my guys, that's what a capital raising group does. Number one, they comply with federal law and investigate that that person is in fact an accredited investor. They also have to comply with what's called blue sky laws. Every state has securities laws. So an investor in California is different than an investor in Florida. And you have to comply with state laws as well. You have to log that onto the PPM, prove that you did it. What else? Yeah, PPM is a sophisticated and important document. It's $25,000 to create a PPM. It takes 2 months to create a PPM on contract. Can we get it done in 45 or 50 days? Yes, because we've done 3 of them already. A lot of the information is transferable, but a lot of it isn't. So on contract, it's 2 months to create the PPM. Back to the question of why is it so expensive? Well, it's the same answer I gave you on the prospectus. You've got expensive people working on it, qualified people working on it. Like I said, raise money for the NBA, an NBA franchise, a NASCAR team, built stadiums across the United States. By the way, that guy works for the guys that I work with. I work directly with the owners of this capital raising group. And here's a little bit about them. Back in the 1980s, Bill owned an accounting firm in New York City. He did bonds, and he did mergers and acquisitions. He made a lot of money, sold his business, retired very, very young. Staff owned an international ag tech company, had a division in Finland, as if it's that way. It might be, that's east. So yeah, Finland. And he was headquartered in Ohio, did business with all the big players, made a lot of money, retired. That was them in the 80s. Fast forward, they came out of retirement, did business separately, but they knew each other, they were friends. And then 14 years ago, they formed this group that they have right now that I was introduced to. And in 14 years, they've raised $9 billion in different industries. They never did industrial hemp fiber until I brought them the first deal. They dove into it. They don't pick losers. They don't work on things that can't get funded. And they did their due diligence and their feasibility study, and they determined they wanted to work on that first project with me. Since then, they want to work on every project that we can bring to them in this industry. Okay, I'm getting ahead of myself. You'll notice that I do that, but let's get back to the PPM. $25,000. I told you what it does and why the shock. Why is it so expensive? Because it is. You get heart surgery, it's expensive. You pay an attorney, it's expensive. If you're raising capital, I don't even think this is expensive. It's just not cheap, right? I mean, it's $48,000 to create a preliminary prospectus. That's the most important document. That's what investors say yes or no to. You got to have all that in there, the good, the bad, and the ugly. You make that ugly not look ugly. And then the 5-year financial projections. It's a very important document. You can't raise capital without it. A pitch deck will not do it for you. It won't. Okay, PPM, private placement memorandum. Important document. It's got to be right. It can't be wrong. You cannot make mistakes on these things. Just like being a surgeon, you can't make mistakes. So that's why it costs this money. Moving to the next amount of money, $50,000 as a deposit on the capital raise, credited against the success fee. The success fee is 7%. If we raise $20 million for you, the success fee is $1.4 million. We raise 21.4 million, you get the 20 you need, and the success fee for almost 2 years of work is $1.4 million. Okay, that $50,000 that you put down as a deposit on the capital raise is minus from the success fee when the project is complete. You might say, well, if you guys are so good, why do you need a deposit? Here's why, because we can't have the client back out. If we've done the work and we're 3 or 4 months into the capital raise and we're getting the money and we're making it do, we're upholding our end of the contract and we're making it happen, and the client were to come to us and say, my brother hit the lottery, I don't need the money no more, I'm good, thank you for your help. That means we've wasted 3 or 4 months of time, and we could have been working on another project where the client didn't want to back out. So a deposit is required to show that they don't want to back out and that they're serious. It shouldn't be a problem if you're serious about business. And that's a very good reason we can't have you back out. I mean, you can back out if you want, I guess, but that's not what we're looking forward to. We're looking forward to everybody going at 1,000% to get the same end goal. So a deposit is required because, the client has to be committed to the project as well. If we're going to spend our time doing it, then they got to be committed. So the total cost of a capital raise, $123,000. Let's break that down. Matter of fact, hold that thought. Total cost of a capital raise is $123,000 made in 3 payments, 3 installments. 48, we create the prospectus, do it. 25, we create the PPM, do it, get it done. 3 months, 2 months, put the $50,000 deposit down, you go forward. People, don't be shocked about this. What I'm telling you is real world action in the capital raising business, not what you've heard on Clubhouse, not what you hear on LinkedIn, because people don't talk about the cost. They probably don't talk about the cost until they get you on a phone call or on a Zoom call. Then they hit you with it, but they're not talking about it in their posts or on Clubhouse. Okay. Let's see, moving on. Let's talk about, okay, hold that thought, 123,000. That's the dollar amount that it takes in 3 payments. We've modified that for a reason. I'm going to get back to that. Let me get to the what you get for that dollar amount, because this is key. This is important right here. All right. Normally, you've got the founder of the company. You've got, boom, they engage with the capital raising group. Capital raising group is contracted to raise the money. They go get the money for you over here, okay? In the middle, you got the founder of the company again. The capital raising group expects the founder of the company to have the seed money. Seed money is to build a factory. You're looking at, well over $1 million. With our experience with industrial hemp fiber, you need about $1.5 million to complete all the third-party studies, to do the genetics testing, the seed trials, the 2 pilot test crops that you got to plant, and you got to buy that from the farmers after they grow it for you, to test it to make sure it's right for that region. You got to buy the seeds for the farmers. You got to have several independent third-party studies to get to the point to where you can get the money. You have to build the supply chain. Who are your farmers under contract? All right, who's growing it for you? Where are they going to be at? You got to buy them the seeds. That is what you got to build first. Then you got to build the offtake. Who are your buyers? It starts off with non-binding letters of intent to buy. It turns in before we get the final money. Then you have to have binding letters of intent from buyers who are willing to buy from you. You cannot have a unorganized mess, and you can't tell the money people that, oh, I'll just go get buyers. I can make it happen. No, you got to have it locked down before they release money. This is black and white. This is technical. Okay. There's a process to building a business. It cannot be done in a weak manner. It has to be done decisively. It has to be exact. And that's what we help you do. So a normal capital raising group is going to leave the founder out there to go do all that. They're going to expect the founder to have the seed money. They're going to expect the founder to know how to build the supply chain and how to build the offtake, which is get all the customers lined up. They're not going to hold your hand and help you. You're supposed to do that. Our guys do it a little different. Okay. So from the beginning, we've already done it, so we know how to do it. And we're going to advise you on how to do it. We're not going to do the work for you, but we're going to give you punch lists. Here's what you do now. Here's what you got to do this week. Over the next 2 or 3 weeks, you got to do this. We're going to advise you on how to build the supply chain. We're going to build it with you, not for you, but with you. Okay. The manufacturing processing is in the middle. You don't got to build that. That's the equipment. That's what we're doing. Okay. We're going to take you to the point when the time is appropriate and right. Here's how you go get customers. Here's who you approach. Here's what you say to them. Here's how much you tell them you can sell it to them for. You building the supply chain. We can tell you that you can tell the farmers that you can tell them you'll pay them $250 a ton. We've got all this ironed out. Okay. As compared to a normal capital raising group who doesn't help you build anything, they just get the money for you. But before they get the money, you got to have all this done. We do it in a different way. We help you build it, teach you how to do it, because we know that we can't get to the ultimate goal of getting the money unless you've got all this stuff built. So it's our obligation to help you build it so we can all get it done together. Let's talk about differences in raising money. Okay. Equity, investor money. Typical capital raising groups are going to go get investor money because it's easier for them, I guess, to be honest with you. They approach the equity markets, and the quicker they can get it done with the least amount of effort, they make more money. Do they get it done quicker than us? No, they don't, because all that stuff has to be built. While that stuff's being built, instead of just getting investor money, here's what we do different. It's called debt and equity. We maximize low-cost debt and we minimize equity. Why would you do that? If you take all investor money, all of it if one investor or an investor group comes in and gives you the $40+ million that it's required to build a factory, then they're going to want, in return for giving you all the money, they're going to want 90% ownership, majority control. You're the founder of the company, but now you're not the captain of the ship. You're a passenger. And it's probably going to be a good ride, because if you own 10% of a hundreds of millions of dollar business, you're making out pretty well. But most founders of companies don't want to be a passenger. They want to be the captain, and they should be. That's right. That's the right thing to do. So how do you do that? Maximizing low-cost debt, minimizing high-cost equity. How do we do that? It's basically going up the ladder. My business partners in Cleveland call it progressive capital raising, least expensive money first. So the first step up the ladder would be grant money. That's the cheapest. It's free, as long as you comply with the grant requirements. Turns out in industrial hemp fiber processing, grant money is available for research and development for colleges, universities. It's not available to build businesses. So we know that, because we got 3 factories we're financing, so we already know that grant money is not available. Next bump up the ladder: government money, municipal money, local money. What we ask you to do is to choose 3 locations that you would want to put your factory in. Call the Economic Development Corporation, ask them, I want to put a factory here, I want to employ X amount of people. Would you give me financial incentives? They're going to say yes. You get it from 3 sources, and we can compare to see who's got the best package, right? At that point, my guys in Cleveland, because they're smart, they create a dogfight. They throw it in the middle and they say, who wants the factory? Who's going to give us the best terms for this? Who's going to give us the most money and the best incentives to locate it in their city and employ people in their city? That's the first step. So you got government money, municipal money, forgivable loans. Employ X amount of people, keep them employed, and we'll forgive the loan. Maybe that municipality might donate the land for you to build the factory on. Everything's unique and different. And all 3 of our current capital raises in this industry are a little different, but they're much the same also. So government money, boom, right there. Next bump up, bonds, municipal bonds or private placement bonds. That's cheap money. You're looking at 4%, 6% for private placement bonds. That's less expensive than lender financing. It's almost in line with home financing, owner-occupied home financing. So bonds are a great way to build factories. And that's what my guys are expert at. Remember, Bill owned an accounting firm in New York City. He specialized in bonds. He's been doing this since the 80s. He knows what's going on. So bond money is raised. After bond money is maximized, bump up to lender money, the types of lenders that I represent. Equipment financing, bridge loans, mezzanine debt. Mezzanine debt is a unique type of debt. It's subordinate to investor money. It's got its role to play. So lender money, and after we've maximized government money, bond money, lender money, we maximize all that, maximizing the low-cost debt. Whatever gap is remaining, whatever balance needs to still be raised, then we approach the equity markets and get it from investors. We don't want it all from investors. We don't want 50% of it from investors. We want ideal 60 to 70% of the money is coming from debt and not investor money. That removes the ability of the investor to say they want majority control, majority ownership. They can't do it because they're not putting in all the money. That is how we keep control of the company with the founder and ownership of the company with the founder. There will be a level of investment money. There's no way around it. You're going to give up a little bit of ownership and equity, but the plan is 3 years down the road, we refinance the debt, eliminate the investors, and you 100% own your company. That's the best way to raise money in the world. Debt and equity. That's the way to do it. That's the way we do it. And that's the way we build these factories. Okay, going back to the money that it costs. I told you the cost of the prospectus is $48,000. I told you 25,000 for the private placement memorandum, and I told you it was a $50,000 deposit on the capital raise. Yeah, here's what we've discovered. 2 out of our 3 clients are well capitalized. They've got the money, that's seed money, they have it themselves. One of our 3 clients had the money to engage in a capital raise, but the seed money in the middle that's required to build, like I said, to build a sales team. Before you get that final money, you got to have a sales team in place, a sales path, a team. How are your salespeople going to be educated? That costs money to pay a third party to do that. And third party is important. Investors don't want to see the founders creating stuff. They want third party unbiased reports, information, and actions. So the seed money covers things like that. Again, buying the seeds for the farmers, genetics testing, seed trials, 2 pilot test crops planted. And then you got to buy that material from the farmers because they don't just want it laying around. They didn't grow it to leave it laying around and do you a favor. They grew it to sell it. So seed money takes care of all that for you. Here's what we've designed, and this is unique, very unique. Capital raising groups raise capital. Capital raising groups do not raise seed money. Seed money is supposed to come from the founder of the company, and that typically comes from either the founder's own pocket bank account or family and friends kick in money and invest. Seed money is seed money. Capital raising groups do not raise seed money. Those are angel investors or things like that, right? But what we've designed is unique, and we did it on purpose to apply it to industrial hemp fiber processing facilities. So I told you 123, 48, 25, 50. Doesn't have to be one, but it's still 123. But here's the breakdown of it. $48,000 gets paid for the creation of the preliminary prospectus. When that is completed, 2.5, 3 months down the road, you pay $50,000, which is your deposit on the capital raise, credited against the success fee. That's $98,000 total that you paid. What you get for that is we start the capital raise 4 to 6 months down the road in this process. We do a $1.5 million seed money capital raise. It's called an interim capital raise. We raise $1.5 million, put that in the business account. It's going to pay for everything that I just described. Everything that seed money would pay for, that's what that's going to pay for. So we raise money, seed money, get that to you, and that takes care of everything that you need to build what we call the golden package. Again, the golden package, when you deliver the golden package to investors, they don't want to see a broken down, we're going to do this, we might get this. If you give us the money, we'll immediately go get customers. No, they don't want to see that. They want to see that you've already got the customers lined up on contract that will buy from you. That has to be done, especially in today's market. They need to see that you got the supply chain built. You got all the farmers under contract. You're ready to buy from them. Okay, that all has to be built. These investors want to buy a brand new Lamborghini. They don't want to buy a used Chevy. I like Chevys. Don't hold it against me. I like a lot of cars, but that's called creating the golden package, and the seed money allows you to do that. So here's the bottom line: 2 payments, $48,000 for the preliminary prospectus to be created, $50,000 deposit on the capital raise. That puts you in the game to raise $1.5 million for seed money. That seed money is created on building the golden package to present to the investors. We've built the supply chain with you. Actually, you built it because you do all the work. We just guide you on how to do it, teach you how to do it, and we're there to support you if you need clarification. My guys in Cleveland know how to do this. They built businesses internationally, domestically, and they've been doing this since the 1980s, right? So, where am I at? Yeah, raise the seed money for you. Boom. That takes care of everything to build the golden package. And we finance the golden package with majority least expensive money first. Maximize low cost debt, minimize high cost equity. That's the process for the capital raise. So wrapping this all up in summary is this. Patriot Business Finance Consultants, along with our capital raise partners in Cleveland, Ohio. We're in Ohio, so we're 50 miles from these guys. We've got a turnkey system, one-stop shop to own factories in the industrial hemp fiber processing industry. We represent a manufacturer. It doesn't cost you anything to engage with us until you decide that you fully want to work with us. So let me hit on that real quick. Here's how that works. If you like this video and you called me up and you said, what's the next steps? How do I do this? Okay. I collect information I explain the process deeper. We have, definitely have a conversation, explain the process to you. We sign NDAs. I disclose who the manufacturer is. I disclose who my capital raising partners are. How can I put this the nicest way? I'm not a bragger, but my capital raising partners are incredible. Long history, well regarded. They know how to do this. So they're big players. I told you one of their guys raised money for a NASCAR team and an NBA franchise and built stadiums across America. And the other 7 team members have equally as impressive resumes. So they got a powerful team. Okay. We have our conversation, sign our NDAs. I tell you all the information about everybody and everything, the manufacturer. You research the manufacturer. I'll give you all the information on them. I'll make a personal introduction to the manufacturer with you, and we can talk with them. You decide if that manufacturer is the right manufacturer for you to work with. If you decide that they are, perfect. I think that you will because we're worldwide. Then, if you like the resume and you see who my guys in Cleveland are, the capital raising team, and you say, let's do this. You understand the costs, you're okay with the costs. I need to know that you have the money to go forward with, because if you don't, it's pointless for us to do any of this. So, you got to have cash available to invest into yourself and into your business, because that's what this is. You're building a factory. Don't be surprised that you got to put money into it. Now, when you say, let's go forward, how do I meet your guys in Cleveland? Then I collect information. My role with my partner group in Cleveland is, I guess you could call me their scout. Patriot Business Finance Consultants, I own that completely. When I'm doing equipment financing, it's all us. We're the face. We're the ones doing the work. With these capital raises, I guess I would be a scout. I fully understand their program, how to explain it, how to explain the costs, how to explain why it costs money, and how to explain the end result as far as them getting, working with bonds, working with debt, maximizing debt instead of going for all investor money. I know how to fully explain their program. So that's my role with them. And they pay me. You don't pay me because you can't pay me. It's illegal for you to pay somebody to bring you investors unless they're licensed. I'm not licensed. I'm licensed for what I do with equipment financing and real estate financing, but I'm not licensed to raise private capital. They are, and experienced. So I collect information. I write a white paper and a scope outline. I send it to Bill and staff. I forward it to them. They review it 7 to 10 days. That's their normal process. That's when I started working with these guys. They said, yeah, we do a in-house feasibility study, 7 to 10 days to decide if we want to take the project on. In the case of industrial hemp fiber, we're ready to take the project on. There is no due diligence. There's due diligence that needs to be done on you, the person, but you don't even have to be experienced. You just have to be an experienced business person or be able to adapt to learning this stuff. So they review it. They create a contract. Contract's got 3 addendums: master agreement, private placement or preliminary prospectus, private placement memorandum, deposit on the capital raise. You get to review that contract before you meet Bill and staff. Have your attorneys review it. business partners, friends, family, anybody. Review it, make sure it's good for you. We meet in person. You're welcome to come to Cleveland, Ohio and meet all of us in person, or typically we're going to have it on a Zoom call. We have a meeting. During that meeting, you get to meet the guys who are doing the work, and they'll explain the process to you, what the plan is. You can ask any question on that contract to clarify it. And then after the meeting, you can decide to go forward. You can say, I need a day or two to think about it, or you can go forward with it, because I've really explained everything, all the details here right now. This is all the information about it. When you meet Bill and staff, they do the same thing. And that is how you build a factory. That's how you finance it. Keywords: Securities and Exchange Commission compliant capital raise. Key, important. Don't do it without following the law. All right. We're connected with the manufacturer. They've been in business since 1866. They know what they're doing. We're already financing their equipment with another client. He's happy with it. We've got references for you to talk with. Yeah, I think that sums it up. Check it out. Paul@patriotbfc.com. If that's my email. Email me, set an appointment if you want to talk about any form of financing. Realistically, we want to help you with equipment financing, real estate financing. If you're seeing this video and you're not interested in industrial hemp, that's what we do. But we also are now a one-stop shop where you can own and operate an industrial hemp fiber processing facility in an industry that is projected to be worth $2.3 billion in the United States by 2027. For $98,000. Sounds unreal, but it is real. It's unique. No other capital raising group in America is doing it the way we're doing it right now. That's the facts. Get a hold of me and don't make fun of me. I'm looking to hit the stop button. I don't want to edit this later. I just want to put it up. But looking forward to going to work with you, and get a hold of us. Let's talk about it. Thank you. Hope you have a good one.